This is Daybreak Asia. We're counting down to Asia's major market opens. Well, of course, it is the day after the BOJ, the day before the Fed poll, and of course we're still sort of processing the implications of that, what is widely seen as a very dovish move from the Bank of Japan, and whether we'll see a much bigger move when it comes to Japanese assets, depending on the narrative and the positioning of the dot plot from the Fed.
Yeah, we might not see a lot of movement today because, of course, Japanese markets closed, but we will have futures trading. But yeah, it's all down to the Fed now, isn't it? What we see happen from here. There's some other central bank decisions as well, though. We're going to hear from the Bank of Indonesia also. Going to be staying on hold, though, so perhaps much less interesting.
Yeah, we did see yesterday look full steam ahead when it comes to the Japan equity rally, and take a look at whether that's going to feed through for another adjacent market that is hoping for the same sort of narrative to take hold, right, with the value up proposition in Korea. We are looking like a down day when it comes to the start of trading, though, when it comes to South Korean equities. The Kospi continuing to extend that decline. We're down just about 1.1% there. We did see that weakness in the previous session, as we saw a lot of the tech-related and chip-related stocks showing a little bit more of a vulnerability. To that end, the Kosdaq is down by about 0.3%. We'll be watching the finance sector in particular. We've seen financial institutions pledging to provide over $313 billion through to the end of the decade when it comes to projects aimed at climate-related and green funds. So some of those adjacent stocks could move to the positive today. We're also watching some of these firms that may be impacted with the government, the finance minister, I should say, saying that they'll be easing taxes for any firms that will be shown to be boosting shareholder returns. So really part of this enhancement of return to shareholders to try and close that value gap, Paul, for South Korean equities, really hoping to see similar types of reforms that we've seen drive the gains in Japan.
Well, we've been trading here in Australia for just a little over an hour now. Kind of a mixed picture here. We are seeing financials performing pretty well. Materials getting up off the canvas at the moment. One of the best performing sectors in Australia right now, though, is energy. That's better by 0.9%. We've got a Brent crude opening a little bit softer, though, 87.12. We did hear earlier from the Carlyle Group's Jeff Curry. He sees oil rising well above that if the Fed cuts in June as expected. And, of course, we're going to learn more about that a little bit later on. Take a look at Aussie 10-year. Well, it's found a little bit of support there just above the 4% level, and this was after we had the RBA, of course, staying on hold as expected, keeping that cash rate at 4.35% yesterday. Well, let's take a look at how we're tracking in terms of Treasury futures as well. As we mentioned, there is no trade in Japan today. However, futures are trading, and we've got Treasury futures looking like this, just moving a little bit higher as we count down to that Fed decision. Of course, we're not expecting any movement today, but we will get a new dot plot, and that's going to give us an idea of where we're heading going ahead, Heidi.
Yeah, and let's get a better idea of how the markets are sort of figuring all this out. Audrey Goes, head of asset allocation at Standard Chartered Wealth Management, and she joins us now. And Audrey, did, I guess, the tenor of what we heard from Governor Ueda yesterday, the Bank of Japan decision, and the sort of repricing of expectations on what comes next, has that changed your view of Japanese risk assets?
Not really. I think he struck a rather balanced tone, right, in terms of having this one hike for the time being to normalize policy, but at the same time striving to keep policies as accommodative as possible, but of course keeping the room also open for another potential rate hike if price pressure were to spike up, more than expected. So I think overall it's quite a relatively balanced tone for one. And if you look at yen, actually their reaction has been quite muted. I think instead of appreciation like a lot of people were expecting on the street, I think yen weakened actually modestly after his announcements.
So if we assume that sort of the low-hanging fruit with the rally that's taken us up to date has already been taken up, what are the further kind of the next leg opportunities that you see in Japan?
I think for one, the ongoing corporate reforms that we are seeing in corporates in Japan is still ongoing. And second of all, we are also continuing to see flows both from a foreign investor perspective as well as domestic perspective continuing to be quite robust. So that should continue to support the market in the near term. And longer term, actually, we do have a constructive view when it comes to Japanese equities because the emergence from deflation to inflation will likely allow corporates to have better pricing power and henceforth higher revenue and potentially profitability as well. And this is something that we are also tracking quite closely in terms of the positive earnings revision that we've been seeing in Japanese corporates so far. So we do expect that to continue to support Japanese equities. No doubt we may see some breather in the short term because the market has also done quite well year to date. So some short-term consolidation from here, or breather from here, is entirely possible. And to me, that may not be a bad thing for the market long term.
In terms of Japanese equities, though, we do have this situation where the BOJ is now stepping away from ETF purchases, and through that, it's holding about 7% of Japan's stock market right now. How does this all get unwound? What are the risks here?
So the BOJ have signaled that they intend to take a pause in terms of further ETF purchases. So the market support from that matter will step away, at least from a price-insensitive buyer. But I think more importantly is how they intend to probably offload these holdings. I think for now, it's something that the BOJ will have to manage very, very carefully. And in terms of the messaging, I think for now they have not mentioned anything about offloading ETF allocations for now. But at the same time, I think even if they were to do that, subsequently a few quarters, years down the road, we should expect to see domestic as well as foreign investors picking up some of that slack for that matter, because domestically they have also made it easier and also provide greater tax incentive for domestic investors to actually invest in Japanese equities. And with the ongoing growth recovering, hopefully consumption as well happening in Japan, hopefully that will feed into a positive virtuous cycle where our investors domestically at the very least will feel greater confidence to invest locally in Japan vis-a-vis expatriating their cash flows overseas to invest. And then from a foreign investor's perspective, I think that flows has been quite constructive, because if you look at developed markets, they are still one of the cheapest out there compared to the US for that matter, and fundamentals are also improving.
Away from Japan, I want to take a look at Hong Kong if we can. We have the Hang Seng sort of testing its 100-day moving average at the moment. What's your outlook? Do we break higher or lower from here?
I think we have seen sort of a base forming for the time being because of the policy that the Chinese authorities have introduced over the past few months. But having said that, the overall backdrop for Chinese equities still remain quite lackluster, I would say. So from an economic perspective, I think the word to characterize it would be one of stability. And then in terms of asset prices, I think we do need a bit more in terms of policy support from the government to entice investors back to the market, which have been seeing a lot of selling pressure so far over the last 3 years. And in fact, with the ongoing recovery that we have been seeing elsewhere, maybe even in terms of in Japan, in the US, and even in Europe for that matter, I think Asia as a region for now are still a little bit lackluster. But we'll see if the rally continues. I think then there will be more of a relative sort of a valuation being positioned by investors. And if the Fed cuts as we expect sometime in June and second half of the year, then we may see more interest coming back to emerging markets, specifically Asia.
Audrey, how enthusiastic are you about Korean equities? This value up proposition, the effort to try and close the discount and the value gap, are you convinced that this is going to take hold?
I think it is all the right steps in the right direction as well. So I think we are quite constructive on it. And at the same time, they are also quite exposed to the ongoing tech momentum that we've seen, specifically in AI as well. And exports have also been improving as well. So we'll see whether that translates more strongly into earnings, positive upside and positive earnings revision. But it is also one market that looks very, very interesting, given exposure to tech as well as cheap valuations that we've been seeing vis-a-vis the other Asian markets.
Audrey, always great to chat with you. Audrey Go, Head of Asset Allocation at Standard Chartered Wealth Management. Let's take a look at some of the movers when it comes to the Korean and Australia equity sessions. We're just about 10 minutes or so into the start of trading in Korea. Of course, defence stocks, though, are in focus. We have reports that Kim Jong-un supervised a test of a hypersonic missile engine. That's according to reporting from KCNA. This is a solid field engine for a new type of intermediate range hypersonic missile, and that reporting suggests that the test was successful. So we're watching some of those defence stocks that are trading at the moment. We're also watching the moves when it comes to Aussie miners and some of those materials and energy names as well. On the oil front, Jeff Curry from Carlisle saying that he sees rate cuts supporting commodities and that the upside here is significant. They are set to rise well above the current consensus view, which is between $70 to $90 a barrel, if if the Fed cuts interest rates in the coming months, according to Jeff Curry, of course, formerly of Goldman Sachs. He says he wants to be long oil and the rest of the commodity complex in this environment, speaking to Bloomberg TV. We're also watching iron ore as well. It has been quite a roller coaster ride. We've seen iron ore extending that rebound to back above $100, but we are seeing a little bit more weakness potentially to come. It has been volatile trading over the past few days, but for the minute, we are seeing the iron ore and more broadly mining plays in Australia seeing some upside. Fortescue actually up by almost 2% there.
All right, still to come. We're going to talk a bit more about the Bank of Japan, what's coming up next after Tuesday's historic hike. Rogers Investment Advisors shares their insights. That's coming up later this hour. First, though, we will hear exclusively from the Philippine president about his ambitious growth goals and why he thinks the country's still not ready for a rate cut. This is Bloomberg.
Philippine President Ferdinand Marcos Jr. says he's not seeking confrontation with China, even as Manila works harder to assert its territorial claims in disputed waters. He spoke exclusively to Bloomberg's Haslinda Amin, who joins us now from Manila, and it was a really elucidating conversation.
Well, that's right. As you know, the South China Sea is one of the biggest challenges for the Philippines of late, and that's because there's been increasing tensions in the South China Sea from China, in particular, that aggressive nature that we have seen. We've seen how Chinese ships have rammed into into Philippine ships, causing damage as well as injuries to the crew. And that is the reason, according to Marcos, that they've had to respond in a bigger way. It is about defending national sovereignty. It is not about provoking China. In fact, he says he wants relations to go back to an even keel. He does not want to, in his words, poke the bear. So you get a sense that he wants temperatures to be dialed down. He's keeping communications open, he says, with China, because he wants to do exactly that. He wants a peaceful way of dealing with the situation in the South China Sea. Now, I did ask him what it would take for him to perhaps get the U.S. involved in countering all the pressures from China. And he says, you know what? It would take an existential threat to the country. So it would take a lot. The bar is really high for the Philippines to get the U.S. involved in this. And you know what? He also said you can't always turn to Big Brother for help. So there you go. Pretty clear that he, as far as possible, isn't wanting to get the U.S. involved.
Well, it has, in terms of domestic policies, we've got an economy that's absolutely galloping in the Philippines. Looks like it's going to hit that 7.5% growth rate target, and it's doing it with some of the highest interest rates in the region as well. What's the rest of this year hold?
Oh, well, that's right. Great news, right? This is one of the strongest growing economies in Asia, and it is expected to continue to do so. You talked about that 7.5% growth that is likely for the year. That is the higher end of the target that they have for 2024. It is between 6.5% to 7.5%. As you said, a lot of things going for the country, lots of investment coming in, a lot of growth drivers. Take a listen to what he had to say.
Much of the policies that we've taken on are really to spur growth. That is that's the most important part, because it is only growth that will pull us out of the morass that was left after the pandemic. Even in terms of debt ratios, even in terms of unemployment, even in terms of inflation, it really is growth. That seems to be the key. Is it sustainable if we continue down this road? If we defend all of the things that we are doing, I believe it is. I believe it is. If we are also agile in terms of responding to the shocks that come up from the outside. To put it that way, shocks that we cannot control or can have very little influence over, if any. So That will be the key.
It's a 6-year term. Do you think you can get to 8% within the 6 years that you're in office?
Sure, why not? There's no. We always plan for the ideal. We don't plan for a mediocre result. We plan for a very good result. And as I said, we just have to adjust along the way as we continue to transform the economy. But yes, I think it is. I think it is doable.
Several banks are currently in focus because of interest rates. In the Philippines, rates are at, I think, 17-year highs. How much room is there for you to cut rates, or rather the BSP to cut rates?
We're still battling inflation. Inflation is still our biggest problem. And when you separate core inflation to inflation that involves agri-products, for example, you can see that the core inflation, we're doing rather well in terms of controlling it. But again, these shocks that keep coming in.
But still not quite the time to cut rates because inflation is still sticky.
Perhaps we look at it almost every week to see if it's time to bring down the rates. We are not yet there.
And the peso at a 3-month high? Are you comfortable with the peso? Philippine peso at a 3-month high?
Yes, because it's an indication of the strength of the economy. There is a downside to it for the Philippines because of our overseas workers, where the dollar is worth a little less than it normally would be. But I see it as an affirmation that the economy has grown stronger. And that's one of those obvious tests. And the dollar, I mean, of course, because it's a relative measure. The dollar has not depreciated. So if the value of the peso is increasing, then that is a good indication that again the economy has gained strength.
So optimism in the Philippine economy. Worth noting as well that part of that growth drivers could be that transition to clean energy. Remember that its sovereign fund, Maharlika Fund, has been getting a lot of investments for green energy into the country, projects which could span several years, and that could drive growth as well. Heidi, Paul.
All right, thanks very much, Haz. And, as Haslinda was talking about there, the Philippines also right in the thick of it when it comes to the disputes in the South China Sea. And that's something that doubtless is going to come up when Penny Wong and Wang Yi, the Chinese foreign minister, meeting today in Canberra, are going to discuss. This is, I think, the 6th time that they've met. I'm taking a look at the Ministry of Finance's translated statement. Very positive, continuously increasing trust, dispelling doubts. But still, a lot of those issues remain, don't they? The South China Sea problem hasn't gone anywhere. There's China's courtship of those Pacific Island nations as well, so still plenty for these two thorny issues here for them to unpick.
Yeah, and we kind of know some of the deliverables and the sort of last remaining tariffs on Australian goods. Obviously, wine will be one of them, and we know that Wang Yi, after he wraps up in Canberra, we are getting that press conference. He will not be partaking in that. He will be, however, partaking in a meeting with the former Prime Minister Paul Keating, much, I assume, to the ire of the current government, because I know, as we know, Paul Keating has been pretty critical of the way that the Albanese government and even previous governments have approached both the relationship with Beijing, but also questioning the decisions around AUKUS, right, and questioning, where sort of, I guess, the best interests for Australia should really lie.
Yeah, it's going to be an interesting meeting, and we await the statement at the end of it as well, some of the rhetoric and the tenor that comes out of that. Just want to get you across what was something we're looking at on the terminal right now. It is the Japanese yen. It's continuing to weaken, 151.25 at the moment. If you take a look at it versus the euro, 164.28. So that weakness really, the yen falling to its lowest level there on future Bank of Japan policy bets. Of course, the normalization of rates in Japan came as no surprise, but some of these currency movements are perhaps a little bit surprising. Plenty more to come on Daybreak Asia. This is Bloomberg.
Bank of America CEO Brian Moynihan says it'll take time for the banking industry to work through issues with commercial real estate loans after a New York regional lender alarmed investors with its exposure in the space. He told us exclusively how the troubled sector is in a slow burn.
The industry is well capitalized, has good liquidity. Believe me, from last year to this year, people short up their liquidity across the industry. Commercial real estate is a slow burn. It's a classic burn. In other words, if you go back in the late 80s and early 90s, we had a rolling commercial real estate recession. And so there'll be difficulties, and we're working that. But, you know, the trading attitude, which is these assets got to move at a price tomorrow morning, isn't the way the banking system works. And frankly, that's the value of the banking system. We work with clients. We figure out what you take a building, you figure out what the ultimate end state rental rolls will provide. You refinance it. Sometimes that wipes out the equity. Sometimes it doesn't. We're careful in how we underwrite as an industry. You know, the top 30 banks go through the stress test, which has an effect that says, wait a second, if you're underwriting out in an odd way, you have to put up the capital to prove you're right before you even get the chance to prove you're right. So in other words, your capital requirements reflect your underwriting today, even though recession may never come. And it reflects your underwriting commitments under a scenario where commercial real estate drops by 30 or 40% instantaneously. So there's an effect on that on the industry, which is much more conservative building and much more middle-of-the-road building, which is probably slow down the capital provision to some of these companies, but on the other hand, it's not a bad thing when you get to this point. So we feel very good. Does that mean banks might fail? There's been thousands of banks have failed across the last 30, 40 years. That's what happens. Business models change. But on the other hand, the quality of the banking system is strong.
That's Bank of America CEO Brian Moynihan speaking exclusively there to Bloomberg Surveillance. Right, Blackstone Mortgage Trust has responded to fresh concerns raised by short seller Carson Block. A trust spokesman says the Blackstone vehicle increased liquidity over the course of 2023 to near record levels and reduced leverage while maintaining strong earnings. Block's Muddy Waters revealed a short position in the trust last year and says property market woes have since got worse.
Yeah, actually, we're more bearish on Blackstone Mortgage Trust than we were when we announced the short in December of last year. And the reason for that is initially we were really only focused on office, but we've come to the view that a lot of multifamily real estate is probably quite troubled.
All right, here's some of the latest corporate stories that we're following. The New York Times says Saudi Arabia is planning a massive push into AI. Their sources say the kingdom is considering a fund of about $40 billion, which would make it among the biggest players in the sector. Representatives of the Saudi Public Investment Fund have also reportedly discussed a potential partnership with Andreessen Horowitz and other financiers. Xiaomi says it wants its first electric car, the SU7, to become one of China's 3 best-selling luxury EV models. President Liu Weibing cited the internal target as the company prepares to begin sales of the SU7 across China next week. Xiaomi's move into EVs will test its technological capabilities amid a price war and sagging sales growth.
Well, take a look at how futures in Europe are opening up. Of course, it is a holiday kind of thin session that we're getting any kind of carry through from here in Asia, with Japan off today after the BOJ. But we have seen European futures looking a little bit softer as we get into the start of trading there. The previous session, we did see an advance there, just ticking up and snapping that 3-session losing streak, but not a great deal of conviction, of course, ahead of still a quite significant event risk with the Fed later on this week as well. We've also seen a lot of those bets compiling when it comes to the pound, rallying to the highest since 2007 ahead of the BOE. This is what the third consecutive week of that positioning, according to CFTC data for the pound. So we could potentially see a bit of a risk of sterling pullback if the risk of cuts is really being flagged by the BOE. German DAX futures looking pretty flat at the moment, watching some of those key energy stocks in particular as we continue to see that climb in oil and also some flattering commentary on oil and other commodities from Jeff Curry. This is Bloomberg.
At today's meeting, we took a thorough look at the recent economic, financial, and price developments, particularly in wages and prices. the board members determined that recent data and information from hearings, including the current results of spring wage negotiations, have confirmed the strengthening of the virtuous cycle between wages and prices. Therefore, the bank has decided to review its large-scale monetary easing program this time.
It was a BOJ Governor Kazuo Ueda there speaking after raising interest rates for the first time since 2007. And of course, perhaps after all that anticipation, a well-deserved holiday, public holiday when it comes to trading in Tokyo today. But we do have trading in Nikkei futures as well as, of course, continuing to watch the moves that we see in the yen. Futures are pointing to the upside pretty firmly, 1.4% they're higher. And this, of course, as we continue to see just the extended moves in the yen falling to the lowest since 2008 against the euro, after we really saw signalling that the BOJ path is being seen as gradual tightening, such dovish tightening anticipation going into the end of the year. So that really saw what was really the reversal of the fears for the currency. Taking a look at the Kospi as well, we're seeing that up by about 0.9%, so reversing some of the weakness that we saw earlier. And in fact, financials are doing very well in that session. We had a number of announcements from the government, including the announcement that they would ease taxes for firms that are aimed at boosting shareholder returns, following up on that pledge to improve valuations and boost the local equity market. So the government set to reduce corporate taxes for a portion of increased shareholder returns. We're seeing some broad-based reaction to that as well. Also watching the latest when it comes to the doctors' walkout as well. We're expecting to see more of those allocations being announced today, as well as some pledges when it comes to green stocks. We'll see them reacting today as well. The finance sector promising about $313 billion in green funding. We're also seeing a little bit of upside here when it comes to trading in Sydney. But Paul, of course, we're still very firmly focused on how that yen potentially reacts. We would need to get a super dovish note out of the Fed to see any kind of reversal, I think, at these levels. Yeah, the yen been losing ground all day, and in fact it's slumped to its lowest levels in 2024 so far after the Bank of Japan ended the world's last negative interest rate regime. Currency traders focusing on the gap that remains between Japanese and US interest rates. And investors also expect further rate increases to be gradual, building the case for Japanese equities to continue their advance. Of course, they're not advancing today. It's a holiday. But let's talk to Ed Rogers, CEO and CIO at Rogers Investment Advisors. So, Ed, when you look at those yen movements, weaker again, does that suggest to you that the market thinks there's one and done from the BOJ? Or is there more to come? And if so, when and how much?
Paul, Haiti. Yes, clearly the market is telling us what they think with the yen move. A little bit surprising, frankly. I'd sort of expected the yen would appreciate a bit, but I think this is also very much a reflection of what people are interpreting as far as the Fed move at the end of this week.
Yeah, that's definitely the next big macro event here. But just in terms of Japan, the BOJ seems now pretty confident in Japan's recovery, that the fight against inflation is going well. How confident are you feeling about those things?
Look, I think this is a very positive development for Japan. It is certainly a sign that the BOJ and I think many other actors here feel that we're getting a return to normalcy, if you will. So less need for the hand of the government by way of BOJ to be providing free capital. And that's a very positive sign. This is a very, very good sign, I think, overall for the Japanese equities market and the Japanese economy in general, that the BOJ is comfortable to make this move.
So you've got really that standout performance when it comes to wage negotiations. But if you continue to have such a weak local currency, does that not negate some of the effect when it comes to household confidence and domestic asset valuations?
Good question. Again, I think we're all a little bit surprised at the dollar yen move today to 151. So in an overall sense, yes, I do agree with your comments, but I'll stand by what I started off saying, which is this is overall a positive indication as far as where Japan is. And so, look, they've started the move. They now have much more flexibility in a way to sort of put the foot, foot on the pedal on the brakes or the accelerator. Which one are you going to do? It's a good thing now that the market gets to wonder about that a little bit and wonder about how the Japanese interest rate policies will well, there'll be a little bit more volatility, and I think that's a good thing, frankly. And that will play out over time as we see really the situation in the United States, and I believe China is also very important to understand where dollar yen and the overall Japanese economy is going. China's a huge factor in all this.
Yeah, and that factor is not just economic, right? You're talking about the geopolitical realities of the region, and obviously that may very well change after November this year.
Absolutely. So in the short term, what you'd say is, if we're getting back to a true cost of capital model for the Japanese economy, you'll have small and medium-sized enterprises and even some large companies that will see what the new interest rate environment looks like, how they perform. But in a very, very broad sense, the overall Japanese economy, China is the largest trading partner since 2004. But the geopolitical realities of living in we live in a tough neighborhood here. North Korea, China, the geopolitical realities of since 2022 having changed indicate that certain parts of the Japanese economy will respond differently now than they did previously, when China has ups and downs and when the United States has ups and downs with China.
It's still a lot of work here for the Bank of Japan. There is their enormous balance sheet. We've got a chart on the Bloomberg terminal that illustrates that. There's also the question of what it does with its great big pile of ETFs. I mean, how do you unwind both of these positions without destabilizing markets?
Another fantastic question that we've all been pondering for the last 10 years. My basic view is bonds are a little bit easier to deal with. You can just sort of hold bonds until they expire, and so be it. Unwinding the ETF positions, which are substantial and have provided significant market support to Japanese equities, that's a little bit more challenging. My gut is at the end of the day, they're going to find some form of government giveaway. Maybe this becomes part of your pension fund distributions. This becomes part of your social welfare program. And they could, in fact, have a distribution in kind at some point to all of Japanese citizens and say, you're all part of the Japanese economy now and you're all going to benefit. And that would be more than likely the least disruptive way to solve the problem.
Yeah, and there's an interesting question around how Japanese citizens respond to this as well, because there is a huge pool of household savings, and as Heidi mentioned earlier, a very, very weak yen. Would the eponymous Mrs. Watanabe be very tempted to just keep some of that money at home and earn some interest at last?
Which is what she's been doing for the last 10 years. The NISA account programs have not done what the government has wanted them to do. It's not provided similar to the 401k vehicles in the United States, where you provide tax-free, frictionless trading, and all of a sudden people buy more equities. It simply hasn't happened in Japan. I think it's about 63 cents of every dollar deposited in these accounts remains in cash. So they're gonna continue to experiment, I believe, try and sort of poke Miss Watanabe, find ways to poke Miss Watanabe into getting more market exposure. They have not found the right cocktail. They have not found the right party juice, as it were, to serve to make that an appealing drink for Mrs. Watanabe. Not yet, anyway.
Ed Rogers, CEO and CIO at Rogers Investment Advisors. Always great to have you with us. Coming up, though, we'll be talking about the biggest opportunities for investors in China's credit markets. ANZ's International Head of Corporate Finance shares their insights next. This is Bloomberg.
The U.S. is running a 6% fiscal deficit, the largest deficit ever ran in history in a peacetime, non-recessionary environment. And think about this. If they do it in a recession, it's because it's providing, let's say, unemployment insurance. They're doing it full employment, red-hot economy, and they're turbocharging an environment that is already being stressed. That's why Bitcoin and commodities are the two best-performing asset classes out there.
It's Carlisle, Chief Strategy Officer of Energy Pathways, Jeff Curry, speaking exclusively with Bloomberg on the commodity rally. And if we take a look at some of those commodities right now, we got Brent, it's a little bit softer, but still holding its ground, really, $87.19 a barrel. Jeff Curry says he sees oil rising well above the consensus of 70 to 90 a barrel if the Fed goes ahead and cuts in June, as the expectation seems to be. Europe rebuilding stockpiles, China's move to support manufacturing, that's what's behind that call. The love not extending to iron ore, though, continuing its slide that we've seen so far in 2024. Just above $105 a tonne at the moment. Notwithstanding that, though, we're seeing some of Australia's big iron ore names gaining today. We've got Fortescue Metals up by nearly 2%, Heidi.
Yeah, some of the winners there and what has been a pretty volatile session there. Take a look at one sector that's performing quite well in the Korean section. In Seoul, we are seeing financials really leading the gains there, and in fact by as high as a 4% rally when it comes to the KB Financial and some of those associated names. We have had really just a flurry of announcements when it comes to what could contribute to this value up program, right? South Korea and in fact the finance ministry telling investors and bankers in a meeting that the tax burden for companies that are taking steps to enhance returns for shareholders will be eased. This is part of the broader pledge to improve valuations and boost the local stock market to reduce the so-called Korea discount as being really a key priority for financial and market regulators in South Korea. The government set to reduce corporate taxes for a portion of increased shareholder returns, according to the finance ministry. So a lot of these incentives and tax benefits are really coming through the corporate value up program. We see some of that reaction in the session in Seoul today. Well, China's property debt crisis has entered a new stage as tensions increasingly shift to developers' court battles with creditors over debt restructuring plans and the once unthinkable consequence of liquidation orders. Let's get some insight into what happens next. Bloomberg is hosting its inaugural China Credit Forum, which kicks off in just a few minutes' time. Let's get over to Hong Kong. Annabelle is standing by with our next guest, who is a speaker at the event. Belle.
Thanks, Heidi. Yeah, really excited for this event kicking off in about 15 minutes from now. Going to be broadcast live on Bloomberg television as well, so you can stay glued to your screens for that one. But let's bring in one of the speakers from today, and that's John Corrin. He's head of Corporate Finance International at ANZ. And John, you're going to be speaking to us today about the opportunities and the future landscape as well for what's happening in China's credit market. But you're a loans man and you know a lot about this market. So let's just kick it off with the present day. What are we seeing and where are we at in the credit cycle?
Yeah, it's been a relatively quiet couple of years in China, mostly because the interest rates in US dollars have been much higher than renminbi interest rates. So as a result of that, the focus has been recently on renminbi loans. I think that's going to change a little bit as interest rates start to come down in the second half of this year. And also one of the interesting developments I think that we're going to see a lot of is the offshore renminbi market. It's still pretty small at the moment, but I think that's going to be something that's going to take off later in the year. And a lot of Hong Kong borrowers are going to take access to that renminbi market. Yeah,
I want to really get into the details of that one, offshore yuan lending. Yep. Who are the sort of issuers and who's also going to take up those loans?
Yeah, at the moment, there's about $240 billion of issuance last year in the loan market in China, of which just under 40 billion of that was offshore. Most of that offshore market was in US dollars, I think 65% of that, and about another 25% in Hong Kong dollars. The renminbi offshore market, the CNH market as we call it, represented about 1.5% of that market. So it has an awful lot of room to grow. And already this year we've seen a very interesting deal come to the market in respect of a take private for a tissue manufacturer called Vinda, listed here in Hong Kong. And that has a 15 billion renminbi financing attached to it. The first time we've seen this sort of financing used for offshore companies. And even particularly more interesting than that is the fact that this is a take private by an Indonesian company. So very interesting to see people with no direct connection borrowing in the renminbi market offshore.
Yeah, because I think that there's certain geopolitical overhangs really here in the Hong Kong market. So would that be something that would sort of dent the appeal perhaps, or what are you sort of expecting?
Yeah, it's a bit of a mixed message. I think the loan market in China is coming off a fairly low base, so Of course, geopolitical considerations are always going to be relevant, but the market's been quiet, largely as a result of some of the restrictions during the COVID times. So that's going to rebound a bit, and I think a lot of borrowers have been delaying accessing the market just because they do feel that interest rates will come down in the third or fourth quarter. Business confidence is still a little bit shaky, and I think many people feel that it's a good idea to defer capex as long as they can. And the M&A market is still very quiet. If you look specifically at China, I think the M&A market was about 20% down last year, which was coming from an extremely low base. And this year it's been extremely quiet in the first couple of months.
Yeah, I think that really points to credit demand, because we haven't seen, it's been so weak amongst corporates and also households alike. So when are you expecting that credit expansion then to pick up?
Yeah, I think it'll probably be third or fourth quarter, perhaps fourth quarter more likely, because it takes a little while for the interest rate reductions whenever they happen to flow through. But we are seeing some bright spots. I mean, there's a lot more activity from Chinese borrowers in South and Southeast Asia. We're seeing, of course, many Chinese borrowers very active in renewables, in wind and solar. And we're seeing a lot of activity from the electric vehicle manufacturers and battery manufacturers. So those are definitely bright spots in the market.
Yeah, that's the role here really that creditors can play. I mean, how much is that going to be on more of those sort of new growth drivers in China?
Yeah, I think pretty much every investor wants to get a bigger share of the renewables and sustainable finance business. So I think that's a great opportunity for people. At the moment, I think it's only about 10% of Chinese loans are either sustainable or green. That clearly has a huge way to grow, and there's a massive opportunity there. And every investor in the bank world is looking for those opportunities. So I think that's going to be something which will only grow and continue to grow very strongly over the next couple of years.
So much of China's credit crisis has been down to the woes in the property sector, and we've just continued to chart the sheer number of builders or related companies. I think there's more than 20 at this point that have received winding up petitions in Hong Kong. Does that tell you that we're entering a new phase in the property cycle?
Yeah, I think mostly if you take away the property sector, the credit environment in China is reasonably benign. There haven't been too many defaults where borrowers have accessed the public markets offshore. And a lot of that real estate has already sort of filtered through the system. Banks have provided for those loans where borrowers have got into difficulty. So I think perhaps we're going into a new phase. And many of the investors were not actually exposed in the loan market to those loans. I mean, there's been a lot of caution for a number of years from many loan investors. So, sometimes I think in the loan market, some of those real estate issues may be over-exaggerated a little bit, but it is something which clearly does impact upon confidence of investors.
All right, John, thanks for your time. That was John Corrin there, the head of corporate finance at ANZ. Really looking forward to your panel coming up later today because, Paul, as we said, it is the first Bloomberg China Credit Forum taking place in Hong Kong, and also the first that we're going to be broadcasting live on Bloomberg Television.
All right, thanks very much, Belle. Annabelle Drew is there, of course, in Hong Kong, and we're going to be live in just a few minutes at the inaugural China Credit Forum. It is hosted by Bloomberg News, and the focus is going to be the future of China's $13 trillion credit market. We've got more ahead on Daybreak Asia. This is Bloomberg.
Well, Hong Kong's fast-track domestic security law is prompting new warnings from the US and EU that it could muzzle open discussion in the global finance hub. For more, let's bring our Asia government and economy correspondent Rebecca Chong-Wilkins from Hong Kong. So, Rebecca, what are the broader concerns about this are not necessarily to do with this one article, but the broad sort of direction of travel that we've seen?
Yes, that's right. So we have seen quite critical statements coming from the US, the UK and the EU. The EU has pointed particularly to the harsher penalties, but also its sort of partial retroactive ability. But the US statement points to sort of this general potential that we could see fundamental freedoms eroded in the city too. And the UK has echoed similarly some of those worries. And as you say, though, comes part of a sort of broader criticism that the Hong Kong sort of openness, once this sort of freewheeling bastion of free speech and so on, is shifting and changing underway. It is worth saying that some of the local domestic business institutions in Hong Kong, like the Hong Kong Chamber of Commerce, have come out saying this will ultimately help improve the business environment.
Okay, so Rebecca, there have been criticisms on both sides. As Heidi mentioned, there's been some criticisms that this law is vague, the wording is vague, but then we hear that it might improve the environment. Let's hear a little bit more about that. How could it improve things in Hong Kong?
Well, in some ways, this perhaps does present both an opportunity and a challenge for Chief Executive John Lee. The sort of passing of this legislation, which was required and mandated under the Basic Law after the handover, and in fact is actually sort of the last piece of major national security legislation that has to be passed after we saw the government move to crack down on those pro-democracy protests back in 2019. And I think there is this desire among the business community and the foreign business community too in Hong Kong for the government to move beyond national security, to start focusing on Hong Kong's status as an international financial centre, to focus more on trying to boost the economy, particularly as we face the sort of ripple-through effect of that slowdown in China's economy too. So there's this, I think, this desire and opportunity to sort of move on with the agenda now. Remains to be seen precisely how we see that happen.
All right, Bloomberg's Rebecca Chung-Wilkins there. Let's take a look at some of the stocks that we're going to be watching when markets open in Hong Kong and mainland China. Keep an eye on Xiaomi. After it reported a revenue beat for the fourth quarter, the company also declared its ambition for its new SU7 to become one of China's 3 best-selling luxury EV models. XPeng also in focus in that space after flagging a bumpy outlook despite better than expected quarterly earnings. Heidi.
And, of course, we're taking a look at US futures after what was a second day of pretty convincing gains in the US. Of course, quite a lot of caution now. A lot of investors stay on the sidelines until we get perhaps that updated dot plot from the Fed and any sort of commentary around the Fed's path forward. We are seeing TAIEX futures up by just about 0.1%, looking cautiously optimistic when it comes to China futures there as well. We are also getting some of these lines through from the Foreign Minister of China, Wang Yi, here in Australia, saying that China hopes to have a fair environment from Australia when it comes to firms. He'll be meeting with members of the business community going forward.